Hello learners, we are now discussing the falling wedge pattern. We call it FWP. Now here if you look at the highs, we are seeing lower highs. If you look at the lows, we are seeing lower lows. This is similar to a descending triangle pattern, except that in a descending triangle pattern, this line which used to connect all the lows was a horizontal line, but in a falling wedge pattern, this is a downward sloping line instead of a horizontal line. Now we need to note that the line which is connecting all the highs, that is this line, is steeper than the line which is connecting all the lows. Now I like to use this pattern as a bullish reversal pattern. What I mean is, before the pattern, I like to see a downtrend, then the pattern starts, the price moves through the pattern and breaks above the pattern, creating a fresh uptrend. So I like to see it as a bullish reversal pattern, that is the downtrend which was before the pattern got converted into an uptrend after the pattern. However, this pattern is an inherently bearish pattern because the line connecting all the highs is a steeper line, so there are chances that the price will break below this line. So generally you will see traders using this falling wedge pattern as a bearish pattern. They will be anticipating a break below this pattern, but we will be using at a bullish reversal pattern. It gives great results. Now let us have a look at some examples. So we are on the daily chart of Britannia. Here if we connect all the lows, we get a downward sloping line. If we connect all the highs, we get a downward sloping steeper line. So this is a falling wedge pattern. Now let us see how the price was behaving. Price had entered this pattern from a downtrend. There was a downtrend before the pattern. Then the pattern started. Price broke above the pattern and moved in an uptrend. So here we can say that this pattern, the falling wedge pattern, has acted as a bullish reversal pattern. That means the downtrend which existed before the pattern got converted into an uptrend. Here is the chart of Indiabulls Housing Finance, the daily chart. Again we are seeing a falling wedge pattern. We have drawn two lines, the lines connecting all the highs and the line connecting all the lows. Now the price was coming from a moderate downtrend, then the pattern started, and look at how the price behaved after the pattern was broken down. The pattern was broken down with this big red candle, and thereafter the price fell very nicely. So here it has acted as a bearish continuation pattern. What does it mean? It means that the bearishness which existed before the pattern started, that bearishness continued after the pattern got broken out. So the downtrend which existed before the pattern, it was continued with a downtrend after the pattern. So we can say that in this case it has acted as a bearish continuation pattern. Here is the daily chart of Axis Bank. Once again, if we connect all the lows, we get a downward sloping line. If we connect all the highs, we get a steeper downward sloping line. It is a falling wedge pattern, FWP. The price was coming from a downtrend, went through the pattern, broke above the pattern, and a new fresh uptrend started. So here FWP acted as a bullish reversal pattern. That means the downtrend which existed before the pattern got converted into an uptrend after the pattern. That's all for the falling wedge. Thanks for watching. Goodbye.